Hello, folks. That's right. We're talking about Costco earnings today. Just reported after hours and very much choppy trading. Right now, sitting pretty well flat after hours, no movement at all for the most part, but definitely a choppy trading session for after hours. Started out in the green, up around 1%, then fell down around 1%. Now sitting relatively flat after hours, up just a wee bit. Let's take a look at these earnings. Obviously pretty highly anticipated. Retail it's frankly the industry right now just to be in. I mean, this is an industry that is benefiting massively with an increased amount of consumer spending, and e-commerce is going off the charts. So definitely important things to look at when you look at Costco. And again, one big thing with Costco is the fact that they are being a wholesale membership-based club. They get both the membership revenue as well as the revenue off of the merchandise they sell. Now, for the most part, for people that don't understand that, the membership portion is their profit line. So the membership is the most important part of their business. So it's always a very key line that you have to look at because it's got a big deal to do with profitability. And if membership's down, you'll typically see profitability be down as well. So always something to look at with Costco because they don't make a lot of profit on their merchandise for the most part. They sell low margins, but their membership, one of the promises there is low prices. So how they get that is by charging you a membership, and that covers some of that cost there. So just some insider info in case you were curious. But let's take a look. Non-GAAP EPS of $2.29 beats by 25 cents. Pretty nice there. And a GAAP EPS of $2.62 beats by 55 cents. So a really good beat in terms of profitability. Pretty excited about that and seeing what that is. Now, this is a massive line here. Revenue of $43.2 billion, up 16.6%, which is a beat by $940 million. Now, this is an incredible beat. This is a number that even I wasn't anticipating. I thought it would be in the 10 to 12 range in terms of increase year over year. They posted a 16% increase year over year. Analysis forecast, I already knew that analysts were forecasting a little bit too light in terms of revenue. So I knew it was going to be a beat on analyst numbers, but I didn't think it would be this big of a beat. That's really good for them. An adjusted comp U.S. sales of 17% up. Are you kidding me? Comp sales in stores of 17% is really good. And an e-commerce line up 86.2% is actually really good if you're talking about a wholesale company, right? This isn't a Walmart or a Target. I mean, seeing nearly doubling your e-commerce sales year over year is incredible out of a wholesale company. It's one thing if you're a traditional retailer, but wholesale, I mean, this is big box quantity. So that's what's kind of wild to see sales grow so much. Really good to see on that aspect. So some more details here. So comp sales in the U.S. were up 14.6%. International saw an 18.7% jump. Really good there. Nothing crazy as far as that's concerned, but really good sales. We'll look at the press release. It's a very boring press release. Let's just be honest here. It's what Costco does. Okay, they're all about the business. That's what they're all about. So I'll zoom in a little bit for you so you can see. I mean, it'd be the nice thing to do. So here they give you just a normal. And then an adjusted percentage increase. U.S. saw, we'll just do the normal. I mean, the adjusted, don't care much for it. You know what I'm saying? Saw a 14.6% increase. Canada saw a 16.2%, and other international saw an 18.7%. And that's really good. International seeing a really big bump there. And a lot of that, too, is mostly going to be the newly launched, I don't know how you say that, newly opened China stores. Performing super well for them. I mean, packed at all times. Total company at 15.4, really good. Now e-commerce also saw 86.4, which is incredible. Net income set at 1.1 billion, which is really good. That compares to 844 million last year, so they really rose that profitability line quite a bit, which is exciting. It's really exciting to see. So yeah, that's quality stuff. It's quite exciting. Yeah. I mean, what else can you say? We also have the balance sheet, which we'll look at. Other than that, the press releases are pretty boring. They don't go into a whole lot of stuff, but we do have a balance sheet to look at, and we love a balance sheet, okay? We love looking at them. They only give me a 3-month comparison, which I don't like that much, but you can see how the business is trending currently. Total current assets at $32 billion versus $28 billion. So there's some improvement there. Most of it really coming in the merchandise inventories. You see a lot more on inventories. Mostly they're going to be stocking up, is my assumption. They're buying product at low prices for the most part, is my assumption. So that way they can have it ready and in their distribution centers ready to send out. That's my guess on the matter. That's why inventories rose. Planning for a strong, probably planning for a very strong quarter 4. Or really, for them it's quarter 2. It's a little weird how they do that, but their breakdown on an annual basis is a little bit weird. But very strong December quarter. How about that? That's what they're expecting, so that's probably why merchandise inventories see an increase. Total assets in general at $60.2 billion compared to $55.5 billion, so also improvement there, which is good to see. Now, from a liability standpoint, total current liabilities sit at 32.6 compared to 24.8. That rose quite a bit, and definitely quite a bit more than the total current assets. So you need to mention that. Rose by around $8 billion compared to a $4 billion increase in total current assets. Total liabilities in general also rose right about $8 billion. So really, it's all the current stuff that changed. A lot more in terms of accounts payable that you need to consider, as well as other current liabilities. So total liabilities sitting at $44.9 billion compared to $36.8 billion. Overall gives you a stockholder equity that is actually shrinking on this company, 15.3 compared to 18.7 of 3 months ago. In my opinion, I don't necessarily like that in a 3 months time span. To see the balance sheet shrink in that aspect in terms of equity by $3 billion, that's not the most exciting information to find out, especially at the stock's trading over a 40 PE ratio currently. So in a market cap of 164, the market cap is not too expensive on this company. A 164 is really not that expensive at all. It's actually pretty darn cheap, I would say. And I do think there's a lot of upside room for Costco. I just don't like the balance sheet right now, so I wouldn't consider heavily buying. But I do think this could be a decent buy. If you're talking about the long term, what Costco does, and even the dividend yield is pretty decent. So I think this is a decent pickup. I just think you get a lot more upside out of other stocks, but this one will be a consistent one for you and pay you a dividend. So however you feel about that, I hope you had a good day, and you continue to have a fantastic day. I mean, love every one of you.